Hello, ladies and gentlemen. Thank you for joining us for another episode of Spot on the Money. I got a great guest with us here today, a dear friend of mine, Mr. Rick Miller from CSI. Rick, how you doing today?
I'm doing excellent, Ali. Thanks for having me.
It's such a pleasure having you here, my friend. I got some great questions to ask you. Our audience is excited to hear me pick your brain. Before I get started, do you mind my asking if you could tell us your story? How did you get into this business? Why do you do what you do?
Yeah. Well, it all kind of started by accident, Ali. I was back in college, majoring in accounting, and I was a sophomore in a fraternity. And a fraternity brother came up to me one night and he said, "Hey, Rick, I want to make some extra money." And I said, "Sure. Is it legal?" He said, "Yeah, it's legal." I said, "Okay, what is it?" And we got our insurance licenses. So here I am as a college student, majoring in accounting, in a fraternity, worried about the weekend parties. And I started in the insurance business and I loved it. So I got my accounting degree, but I fell in love with financial planning and became a CFP, and that's kind of what started it all for me.
Awesome. Well, actually, I'm glad that you brought up the accounting background because if you don't mind, I'd like to spend the first segment here today talking mostly about taxes. It's a topic that is near and dear to people's minds, right? We're all very fond of paying taxes. Can you tell me a little bit about the difference between tax preparation, tax planning, and tax strategy? What's the difference there?
Oh, absolutely. Love to do that for you. So basically, most people think about tax planning just going to see their CPA or their enrolled agent and getting a tax return done. And that's kind of the beginning and end of what they do. But really, when you get ready for retirement, you've got to be thinking about tax planning because you've got different accounts. They get taxed different ways, and you've got integration of all of your money. So tax planning really is taking it a whole nother step so that you can minimize taxes, not only for today, which is just tax planning, but over your entire life. And that's what we like to bring to the table for people, is to do that kind of planning.
You know, speaking of that, Rick, taxes is more of a long-term plan, like you said. It's not just about right now, but it's also about tomorrow. What are some of the things that people make mistakes when it comes to tax planning and tax strategy?
All sorts of things. So one of the things that they'll do is that most people, in terms of saving up for retirement, Ali, are thinking just one way, like a racehorse. They're kind of have the blinders on. They're doing the tax deferred accounts, like their 401ks and their 403bs and their 457s. And those are all tax deferred accounts. A lot of people don't think about taxable accounts and certainly tax-free accounts. And you really need that diversification because taxes have got nowhere to go but up.
Yeah, well, can you tell me a little bit about that? What do you think about the history of taxes, where taxes are now, and what you think is going to happen in the future?
Yeah, I think we've been spoiled. I remember when I became a CFP back in the early 80s, Vidya Van Caspel wrote a book, and the conventional wisdom back then, and still today, I think for most people, is that you should tax defer because you'll be in a lower tax bracket when you retire.
Right.
It is probably true that you'll make less money, most people do, but taxes have got nowhere to go but up because we've had 40 years of extremely low taxes. We're way below the average of 56%. And so with all the things going on in the world and the way the economy's changed, I believe the taxes have got nowhere to go but up. So I think you need that diversification. You need some tax-free options.
So talk to me a little bit more about that, Rick, because I completely agree with your philosophy that we need to plan for the future of taxes being higher. It's like you said, even if you have less income, but the tax brackets in general have moved up, doesn't make a difference. You might still be in a higher tax bracket.
Absolutely.
What can people do right now to help kind of prep themselves for the future?
Oh, there's a bunch of things. So probably the biggest thing on everybody's mind is, should I do a Roth or a Roth 401k? Because those exist now too. So we've been telling clients for the past 15 years, you need that kind of diversification. Taxes are probably going to go up. We don't know how fast, how soon. But as you age, wouldn't it be better if you could hold on to more of your money? So if you had some Roth strategies, so there's Roth IRAs, there's health savings accounts, there's tax-free muni bonds, there's cash value life insurance. There's a number of ways that people could diversify to give them better financial alternatives as they age.
And I think some of them people are a little bit familiar with, but some of them they're less familiar with. I'm guessing for most of our viewing audience out there, you've heard about things like Roth, but maybe you don't know all of the different strategies. Rick, if you could tell the audience something in terms of what they might look out for when it comes to Roth, what are some of the strategies that you utilize when you're working with clients?
Well, a number of things that they could be doing. First off is they should be considering how much of a match they get in their 401k. And if they have the ability to save more money, those dollars should definitely be going into a Roth. Some of these 401ks have matches on them at the employer level. Why not do that too, right? I think that people should really take a serious look by doing some really in-depth tax planning. So when people come in and visit us, they bring their tax returns in. We can go back to their current CPA, and if they don't have someone that they like and trust, we can put them in touch, and we've got the software to crunch the numbers.
And I think that's what most people make a mistake of. When I bring advisors on the show, most of them are saying, oh, well, doing a Roth conversion, the client thinks it's too expensive. But you're able to kind of show them the right amount to do, I guess.
Absolutely. Yeah, mathematically, you've got to crunch the numbers for the clients.
Yep.
They've got to see it.
Yep. And of course, it's changing because the tax environment's constantly changing, income is changing, all of these things are in flux. Before we cut to commercial break, any last tip, any last story you want to share with us when it comes to taxes?
Sure, I'd love to share with the audience a story. Back about 12 to 15 years ago, I was doing a dinner seminar. I built my practice up doing educational retirement dinner seminars. And one of my good clients dragged her friend along, and her friend came to the meeting or the workshop very begrudgingly. But she enjoyed it so much that she took me up on an offer for a free consultation. So when she came in, she said, Rick, I got to tell you right now, I love my financial planner. He's done a great job for me. I don't think you can help me, but I wanted to take you up on the offer. I said, fair enough. So she set her tax returns down, she had her statements, and we just started having a dialogue and talking about her situation. And I said, Carolyn, looking at your information, I'm curious, why haven't you converted the IRAs to a Roth? And she said, well, my accountant never told me I could do that and would save money, and my financial advisor also didn't tell me. And I said, well, do those two people talk together? And she said, no. And I said, well, that could be part of the problem. I said, why don't we get your CPA on the phone? We literally called her CPA right then and there and said, based upon her taxes, could she have converted $20,000 without getting taxed? And he said, yeah. We hung up the phone. She goes, why didn't he tell me that? I'll have to tell you more of that story later. But it's a great story because she became a client, but if I had met her 5 years earlier, Allie, we could have saved her like $80,000 in taxes.
Wow.
Isn't that incredible?
And see, I think that's the main thing that people miss out on is the fact that financial planning really is about looking at all these different aspects together. It's not just an
100%.
advisor, not just the accountant.
It needs to be holistic, right? You need a comprehensive plan.
I think that's the end idea. That's why people would call you. Again, for our viewing audience out there, remember this show, Spot on the Money, is meant just for information and educational purposes. However, if you did want to contact any of the advisors that we bring on the show, we do offer that opportunity. I know Rick is offering not just the tax analysis, but a comprehensive analysis that their team puts together in a custom leather-bound folder just for you. As he mentioned, he's happy to work with you. He also does dinner workshops and other type of educational workshops. So if you'd like to attend one of those, please give his office a call. You can reach him at 626-294-0414. That number again is 626-294-0414. It's Rick Miller with CSI. Rick, if you don't mind, hang tight. I got a lot more questions. I know our audience is excited to hear more from you, and we'll be back in just a moment after this commercial break.
If you've taken the time to build a nice nest egg, you're probably concerned about picking the next big stock. Questions that might be floating around in your head are, what if the market has a big correction?
Could I be paying less in taxes?
How do I see all the hidden fees in my portfolio?
How can I generate more income for retirement?
How will I get the most out of Medicare?
Should I claim Social Security early?
What will happen to my money if I get sick or die? We help people like you by designing a custom financial plan that can address all of these concerns and much more. If you're looking for a truly unique financial experience, look no further because this is what we do and we do it well.
In a rapidly changing world, securing your financial future is more important than ever. From your first paycheck to your golden years, our financial planning is as unique as you are. Our expert advisors provide personalized strategies, helping you navigate through life's financial journey. life is full of milestones. We're here to ensure you're financially prepared for each one. With our innovative tools and tailored advice, watch your financial goals turn into reality. Build a partnership that grows with you every step of the way. Begin your journey towards financial freedom today. Contact us to discover how.
Hello, ladies and gentlemen. Welcome back to Spot on the Money. I'm your host, Ali Hashemian. I have our great guest, Mr. Rick Miller here. Rick, I want to talk to you a little bit about retirement. Thank you for all the information you shared in the previous segment about taxes. I think that's very useful, especially the talk about the Roth. Again, for the viewers that missed our first segment, Rick is offering a complimentary Roth analysis so you can see where you can straddle your brackets to do Roth conversions as efficiently as possible. But let's talk a little bit about retirement. I'm going to hit you with the hard question right off the bat. Why are people so afraid of running out of money? It seems to be the main thing that people talk about when it comes to retirement planning. Why is that the case?
I think one of the reasons why, Ali, is today people are retiring and they don't have the pensions that our parents had. Now, I'd say probably 25% of our clients come in and they do have pensions, and those pensions, of course, will last their entire life. But a good chunk of people that we help on a regular basis are saving their money in their IRAs and their 401k plans. And they've got to convert that into a stream of income. And so I think it's very important that people get a handle on how to manage that money so that they will know they won't run out of money.
You know, Rick, I know it's true that most people don't have a pension these days.
Right.
It's unfortunate, but it's the reality of the case. But some people still do have pensions. I know you deal with a lot of government employees, public employees, state employees. If I have a pension and if I have Social Security, do you still think that they need a lot of help with retirement planning in those circumstances?
You know, it's very individualized, Ali. Every client's different. So that's why financial planning is so important at the individual level. You can't just use rules of thumbs to arrive at how you should manage your money when you retire. But you clearly have to, for most people, make up a shortfall. And if you want to have a retirement that's enjoyable, other than just putting a barbecue in the front yard or the backyard every weekend, you know, take some trips and enjoy your money, you've got to have a game plan. You should have a written plan that's customized for you to spell out where to put your money, how much risk to take, how to minimize taxes, how to be protected from long-term care. I think that's very individualized.
And, you know, you kind of took the words out of my mouth, Rick. You know, I'm very into planning. I believe in the full holistic financial plan.
Yeah.
Some people think that they don't need a written retirement plan, or they do something simple. They just go online, plug in some numbers, maybe do it on Excel. What are your thoughts about that process and that kind of philosophy when it comes to retirement planning?
Well, once again, it's so individualized. Are you helping your kids or grandkids with possibly college expenses? Do you have a disabled child? Are you on a second marriage? Are you all by yourself and you've already lost a spouse? Do you have rental holdings or not? How are you diversified? How big is your nest egg? So you really need a game plan that's customized for you. I think you need to understand what your options are and make choices based upon those options. And then, of course, you've got to monitor, evaluate, and change it on an ongoing basis.
And what do you, if you had to give us a golden nugget, I know there's no, you know, specific tool or perfect asset class out there, but anything that people should be looking at in terms of retirement planning that maybe they don't already have in their portfolio or they don't already have in their plan when they come into your office?
Yeah, sure. One of the things I think that people should do is figure out what the shortfall of their income can be, and then create a strategy that will give them predictable, guaranteed increasing income to outpace inflation. So there's strategies like annuities that people can do. There's a lot of misinformation on annuities, and I think people need to take the time to evaluate, is an annuity a good alternative for them for some portion to make up that shortfall over their lifetime? And then long-term care planning. So what have you done to protect against long-term care? Some people are wealthy enough to self-insure, but long-term care is a big problem that you have to face.
So I'm going to ask you a little bit about both of those topics, if you don't mind. And I'm not sure if we'll have enough time to cover both of them in this segment, so we might bleed into the next segment. Luckily, I have you here for one more segment. But Let's talk a little bit about annuities because it's become such a polarized discussion. We get advisors on here that say annuities are the worst thing ever, and then other advisors that say they're the best tool in the toolbox, basically. And I know anybody that says an annuity is good, they're lying, and anybody that says an annuity is bad, they're lying. You know, it just depends on the annuity, depends on your situation. Can you tell me, though, a few things that you would look out for that might be good in an annuity and some things that maybe people should try and avoid when it comes to annuities?
Yeah, absolutely, absolutely. So when it comes to annuities, there's variable annuities out there, which just simply means you're parking your money with an insurance company, and it's going to go up and down in the market. And those kind of annuities have high fees. And so I agree with Susie Orman and Dave Ramsey and Ken Fisher that most variable annuities are high-priced mutual funds. I think for a lot of people, fixed indexed annuities are a much better choice. But once again, you've got to do your homework. You want A and A+ rated companies. You want products that are designed to give you efficient returns and high returns to outpace inflation. So a lot of homework has to be done in that area. You can't just say, go do this or go do that.
Yep, and I know annuities are a complicated topic all on their own. We could spend an entire episode just talking about annuities, but I appreciate you giving us some general insight there. Rick, any last tips that you have about this whole retirement planning conundrum before we break to commercial?
Yeah, I'll tell you this. In the last set of retirement seminars I've been doing, I've asked the audience if they've heard of sequence of returns. So it's one of the major risks that retirees face. And I'll tell you, no hands get raised in that seminar. And you know why, Ali? Because they're saving for retirement, and whether they have good years or bad years, it kind of works itself out. But when you're living on a stream of income, you need to make sure that you solve the sequence of return problem.
I completely agree with you. It's one of those kind of silent killers, I
Absolutely.
guess, right? Well, you heard it from Rick. He's a wealth of information for us. Again, Rick, thank you so much for coming on the show. We're keeping you around after this commercial break for one more segment. We're going to pick your brain. Ladies and gentlemen, if you'd like to get a hold of Rick at his office, just give him a call, 626-294-0414. That number again is 626-294-0414. He's offering a complimentary consultation where they do a comprehensive analysis about your taxes, about your retirement, everything that you can think of when it comes to your financial plan. Give him a call. We'll be back with you in a few minutes after this commercial break. We look forward to seeing you there.
In a rapidly changing world, securing your financial future is more important than ever. From your first paycheck to your golden years, our financial planning is as unique as you are. Our expert advisors provide personalized strategies, helping you navigate through life's financial journey. Life is full of milestones. We're here to ensure you're financially prepared for each one. With our innovative tools and tailored advice, watch your financial goals turn into reality. Build a partnership that grows with you every step of the way. Begin your journey towards financial freedom today. Contact us to discover how.
Hello, ladies and gentlemen, back for our last segment of Spot on the Money here on today's episode. I'm your host, Ali Hashemian. I got my good friend, a wealth of knowledge, Mr. Rick Miller here. You've talked to us about taxes. You talked to us about retirement planning. You gave us an overview of annuities. I want to wrap up last segment because you talked about something that I think is kind of important, long-term care. Can you tell me a little bit about your thoughts with long-term care? How should people approach it? Does everybody need long-term care insurance? Should nobody buy long-term care insurance? These are all the questions that you're hearing out there.
Yeah, absolutely, 100%. Well, when I started CSI, I specialized in long-term care planning. And I sold about 240 policies, long-term care policies. And I can tell you this, Ali, I think the industry hasn't done a service to consumers. People bought these policies expecting the premiums to stay level their whole life, and they way underpriced the policies. And so over time, the policies have gone up tremendously in terms of cost. I got to tell you, I think most people should come up with a solution that they feel comfortable with. So some people maybe should consider buying traditional long-term care insurance. Other people can self-insure this risk. I think one of the most understood, least used techniques is use the life insurance policy with a long-term care rider. This way, all the money that goes into the policy, even if you never need it, which 50% of the people won't, it's all going to come back to your family, tax-free.
So, and I completely agree with you, Rick. I think the biggest problem that people have with long-term care is either one of two things. They have it and the costs keep going up. They never expected that, and they can't control that, really, unfortunately. No. Or number two, they got it and their concern is that it's a use it or lose. I'm going to keep paying premiums year after year. What happens if I never need it? But with this life insurance hybrid, what you're talking about is that if they never need it and they pass away, then there's a death benefit applicable.
Absolutely.
But what happens if they just want to get their money out of this thing? Let's say they don't die, I know we're all going to die one day, but let's say they need their money before that. And let's say they are not in the best of health. Are these still people that can consider what you're talking about?
Yeah, absolutely. So in terms of liquidity, a lot of the policies have the ability to pull your money right back out without surrender charges. As far as being healthy enough, yeah, you do have to qualify. I'll tell you a quick story. So here I am with CSI, my company. I'm helping people buy long-term care insurance. I'm starting to do comprehensive planning with all my senior clients. And my wife's mom starts to become disabled at a very young age. And she looks at me one night, I'm 42, she's 40, and she says, "Do we have long-term care insurance?" And I said, "No." And she said, "Is that smart?" And I said, "Probably not." She said, "Get on it." So anyway, I'd been diagnosed with cancer, melanoma, 2 years prior. But I was able to package an insurance policy where my wife Laura and myself were on one policy, even though I was uninsurable. And we have a long-term care plan that's packaged in the life insurance like I just mentioned. So there's a lot of different alternatives. I can't just tell you point blank, you should do it this way or that way. There's just a lot of options out there. There's annuities that have long-term care riders that enhance the payouts. So there's a lot of solutions other than just buying traditional long-term care.
Rick, thank you for sharing that story. I think it's hard for people to sometimes be vulnerable, not even about their health, but in your case, you're telling us a story where it was kind of the cobbler's shoes, where you weren't taking care of your own long-term care planning. But I'm glad you did, and I'm glad you came up with an interesting solution to that. That's something I haven't even really thought about much, is where you can maybe use that underwriting arbitrage to help insure people that are uninsurable. So, but the evolution of the long-term care industry definitely has changed. Again, for our viewing audience out there, if long-term care is a concern for you, I'd urge you to reach out to Rick and CSI's team, because as you can hear, they have an incredible amount of experience in this area. Their telephone number is 626-294-0414. We have a few minutes before we wrap up this episode, Rick. I'm going to ask you a tough question, but it's a question a lot of our viewers are thinking.
Sure.
Do I even need a financial advisor? Can't I do this on my own? And if I do need a financial advisor, what am I looking for out there?
Yeah, sure. Absolutely. Well, some people have the expertise, the time, and the skill to just do it themselves. I think most people would rather enjoy their retirement. They don't want to become an expert. They don't want to be a CFP. They don't want to get an insurance and investment license. And so I think many people would benefit from having a holistic plan put together by someone who's independent. That's my approach, is holistic. Let's look at all the pieces of the puzzle. Let's get answers to solutions to questions that you could be facing that you're not even maybe aware of. Let's collaborate with the other experts in your life, like the CPA, the attorney, the property casualty agent. So I think many people can benefit from a written plan that's customized for them. That would be my recommendation.
I like what you said, though, Rick. It's not that everybody needs it, but
Yes.
I've heard that kind of concept of skill and will. Do you have the skill to do it? It's really complicated these days. And even if you have the skill to do it, there's a lot of engineers, doctors, all those type of people out there that are smart people, but do they want to do it, right?
Yeah.
Especially in retirement, it can be a full-time job on its own. We're about to close out. Any last stories, any last bits of information? Again, I hate to say it, but any last golden nuggets you'd give us here today?
Be prepared, be prepared. Sit down with someone you like and trust, work out the questions in the back of your mind, and miss those potholes on your way to a happy, successful, worry-free retirement.
Try and make as little mistakes as possible. Actually, Rick, if you don't mind, I'm going to ask you one last question. We might be pushing time a little bit, But I gotta ask you, you've talked to us about taxes, you've talked to us about retirement, you've talked to us about long-term care and annuities, all these different topics. What do you think about investing in the market right now? What do you think about this overall market and where interest rates are?
Yeah.
Give us your quick 2 cents.
My approach is it's time in the market, not timing the market. So you should be diversified at all times, right? You don't want to put all your eggs in one basket, especially if you're getting ready for retirement. Trust me, you're not going to catch Warren Buffett. He's worth way too much money. So enjoy retirement, diversify.
I like that. I've heard that saying, time in the market more important than timing the market. You know, in market conditions where it's kind of going bad or sideways, it's best for you to just not look at your statement, don't log in online, close your eyes, don't pay attention to the media. But that chasing Warren Buffett one, that was a new one I haven't heard yet. Rick, I really appreciate you taking the time out to come see us here on our show, Spot on the Money. You've been such a pleasure to have as a guest. Again, for our viewing audience out there, this is completely informational. I hope you gained some knowledge. I hope you've gotten some expertise from this great man. If you'd like to take the next step, if you'd like to talk to them, you'd like to have a conversation with Rick and see if he might be able to help you, give them a call. He's got workshops all over at various different times, so you can definitely give them a call, see if it might be a good fit for you to attend one of their workshops. But probably the best thing that you can do is just sit down with him one-on-one. He's offering a complimentary consultation, after which they will put together a comprehensive analysis for you in this leather-bound folder so that you can see exactly where you are, where they think you should be, and what it would take for you to get there. Again, there's no obligation. I hope you've gotten some great information, but if you do want to contact Rick and his great team, it's 626-294-0414. That's 626-294-0414. We look forward to seeing you on the next episode of Spot on the Money. Thank you.
If you've taken the time to build a nice nest egg, you're probably concerned about picking the next big stock. Questions that might be floating around in your head are, what if the market has a big correction?
Could I be paying less in taxes?
How do I see all the hidden fees in my portfolio?
How can I generate more income for retirement?
How will I get the most out of Medicare?
Should I claim Social Security early?
What will happen to my money if I get sick or die? We help people like you by designing a custom financial plan that can address all of these concerns and much more. If you're looking for a truly unique financial experience, look no further because this is what we do and we do it well.